Today, the Federal Fund Open Market Committee, the FOMC, concluded its announcement that they will be cutting the federal fund rate by 25 basis points. This marked the first interest rate cut since December 2024, after 5 consecutive interest rate announcements where they had held rates. After the interest rate was announced, Federal Chairman Jerome Powell had announced that the job market is seeing some softening and the labor market is starting to experience issues. He wanted to cut rates as a means to have proper, adequate control when it comes to risk management. Powell continued to emphasize his mandate about ensuring that the job market remains stable and that inflation remains under control. He has emphasized that tariffs may also cause future inflation issues, but his current stance is strong that the job market may see continual weakness moving forward, so they had taken the approach by cutting the interest rate by 25 basis points. Going forward, the Federal Reserve has announced that they anticipate over 3 interest rate cuts to occur in 2025, which means that the chances of a rate cut happening in October and December are more likely to happen. Other thing under considerations was that the supply in jobs was tight due to the immigration policy that was initiated by the Trump administration, and Powell also confirmed that tariffs may raise the price of certain goods. In the housing front, Powell mentioned that the cut would provide relief for 30-year mortgage applicants, but emphasized that there is no real problem-solving issue for the supply of housing. So overall, this interest rate announcement showcases that Powell is more focused on ensuring that employment remains above the standard and that inflation, even though it may be a concern, is something that is the second priority for the Feds. So today we're going to be going over the charts with you here, give you guys an analysis of what happened today and where we can see the market move going forward. So let's get into it. In today's trading session, we've seen somewhat of a volatile trading day with the S&P 500 going below 6,600 and managing to see a low of 6,550, and while recovering to the pre-market high. In our trades that we have taken today, majority of the focus was plays to the downside. Although we did call some upside potentials trades, our downside trades were the ones that were the key ones here. So our strategy here into today's trading day was to confirm that initially the trading range based on probability was between 6,550 and 6,660. This was a trading range indicated in our call gamma report, as you guys can see right over here. Now, we did not want to go to any strike below 6,550, but we did take one play at one point for that specific time to take advantage of the quick turnaround in the marketplace. As we had seen here below, the bearish gamma where there is a lot of buyers here, and this is where the market favors downside here. And once this level had started to break here, that's when the market quickly dropped on the S&P 500. During this time here, we had assumed that the initial reaction would have been a drop. So by 2 p.m., approximately right over here, the market seen a brief pop, and eventually it started to drop at that particular zone. So what we did here is we call these QQQ 590 puts. They definitely went up more than 200%. We had a pre-announced a MSTR 340 call at 1.8, which was a banger trade. This thing is going to definitely do well overnight. Then we had bought these CRWV puts. these CRWV puts actually did very well and managed to hit over 40%, but we're still holding them as well. We took this this SPX 6500 put as a quick play. It managed to go up 50%, but we didn't get a chance to really get out. We call this FOMC SPX 6550, which was also a very fast entry and exit, and we called it for the $500 account challenge. So in our $500 account challenge, we managed to get the first play as a win here after we're starting from this particular point here. It's off this trade here. So we got the fill on those MSTR calls. It started to really rip, and overall we're watching different trades here as well. So going into this detail here, with the S&P 500 moving chaotically, it comes down to the question, where do we see things going moving forward? So with SPX here, it hit or was close to hitting a key support that we were watching at around 65.45 here. The market did not really gap under this zone here, and it managed to really bounce here. This was what would have been a danger zone and would have seen the market really pick up. Currently, SPX futures are showing signs of strength. So if you guys were watching today's movement in the market, we noticed that the weakness was in the tech side, with Nvidia down 3%, Broadcom down 3%, and you also see Oracle down 3%. So a lot of the tech sectors a lot of the stocks in the tech sector were experiencing weakness, and the key movers were the banks and the financials that showed resilience and strength overall during this chaos here. So what we are looking to see here is that if the S&P 500 into tomorrow's trading day, Powell did emphasize that we see more guidance on rate cuts happening, which is definitely positive. But the labor market is starting to experience some softening, which can be problematic. The market is trading at all-time highs here, so it definitely wouldn't be unreasonable to assume of a potential sell in techs here. Okay, a rate cut is positive, but we have to see how the reaction is if the market was to go lower. If we don't see 66.46 here, then I would assume that the market tops off at around 66.20-ish. That's where we are at currently right now, and we're looking to see if we return back below the 65.70, and eventually this 200-day moving average is where we're going to be seeing very strong support here, and we're going to be looking at that in great detail. So we hope you guys enjoyed this quick overview of what the FOMC was all about, and understanding that if you want to really analyze this key market structure, you really got to look into understanding what the probable range is. In our gamma report, we did mention that 65.50 would have been the lows and the highs as well going forward. So we'll see you guys in the next one, and like always, let's get that money.